Good afternoon, everyone. In April this year, following the outbreak of conflict in the Middle East, the government announced a $1 billion package of assistance measures for households and businesses. This came on top of support that was provided in Budget 2026. Over the last few months, the government has been rolling out these measures. Businesses have received the enhanced corporate income tax rebate and cash grant. Households have received $500 in CDC vouchers as well as USAVE rebates in April and July. And the enhanced cost of living special payments of between $400 and $600 will follow in September. We moved quickly with this first assistance package when the crisis erupted to cushion the impact of the energy price shock on Singaporeans and businesses. At one point, there were fears that the conflict would escalate further and severely disrupt shipping through the Persian Gulf. Fortunately, this worst-case scenario did not happen. But the situation remains fragile. Hostilities had subsided for a period. There was some hope of reopening the Straits of Hormuz, but fighting has flared up again, and shipping through the Persian Gulf continues to be disrupted. A durable ceasefire between the US and Iran is proving difficult. Uncertainty in the region will persist for some time. As a result, we expect global energy prices to remain elevated, which will translate to higher costs for petrol, diesel, electricity, as well as certain imported goods. And at the same time, our economy has held up better than expected. Growth in the first half was healthy, supported by strong investment in artificial intelligence, and we expect this momentum to continue. But performance across the economy has been uneven. Businesses that are more exposed to supply disruptions and energy costs have come under greater pressure. SMEs in particular feel these cost pressures more acutely. Given this backdrop, the government will provide a second package of assistance measures to support households and businesses through this period of uncertainty. I will speak on what we are doing to support households, and SMS Loh Yen Ling will cover the specific measures for businesses. First, to help households better manage their electricity bills, the government will enhance the upcoming USAVE rebates in October this year and January next year. This continues the enhancements to USAVE disbursed earlier in April and July. Taken together, HDB households will receive $110 to $190 in rebates in every quarter of this financial year. This amount should fully offset the impact of higher utility bills for most households living in a 4-room or smaller HDB flat until March next year. Second, to help with daily expenses and cushion the impact of inflation, we will provide every Singaporean household with an additional $300 in CDC vouchers. This comes on top of the $500 in CDC vouchers that we brought forward to June 2026, and this $300 will be disbursed in January 2027. Third, we will provide additional support for lower-income households. We will increase monthly payouts for ComCare interim assistance to at least $250 per month for up to 3 months, with more provided to those with greater needs. We will also be more flexible on the eligibility of the ComCare interim assistance so more households can qualify for the support. This second package of government assistance comes to around 900 million Singapore dollars. Taken together with the earlier $1 billion package, this amounts to around $2 billion of government support on top of what was already provided at Budget 2026. We believe this is the right response given the economic conditions today. At the same time, we recognize that the global situation remains highly fluid. The government is in close contact and close touch with trade associations and businesses, unions and workers, grassroots leaders and residents, and we are receiving regular feedback on the ground, and if circumstances change, we stand ready to respond.
In his remarks, Minister Jeffrey Seow earlier shared that inflation is expected to remain elevated into next year. Against this backdrop, we are boosting our support for our businesses, especially for our small and medium-sized enterprises, SMEs. We do this because we understand that many SMEs are concerned about higher operating costs and their cash flow. We aim to help them better maintain their costs in the near term, while at the same time giving them the support they need to make business adjustment for the long run. So to assist our businesses, to help our SMEs, we will provide additional help in 3 ways. Firstly, we will make a time-bound enhancement to our enterprise financing scheme, in short, EFS, from September 2026 to March 2027. This will enable our local enterprises to better access financing to meet their cash flow needs. We will increase the government's risk share from 50% to 70% for the EFS SME Working Capital Loan and the EFS Project Loan. Businesses will have improved access to financing for their cash flow. We will also enhance the coverage of EFS Project Loan. Currently, I think we all know, the EFS Project Loan supports financing for overseas projects. We will, moving forward, expand its coverage to also cover and support domestic projects by local construction enterprises amidst higher costs. This will make it easier for them to secure financing to manage higher costs amidst a challenging environment. Second, we will provide a one-off SME cash grant to support our SMEs with their cash flow needs. Active SMEs with at least one local employee will be eligible for this SME cash grant. SMEs will receive a grant of $500 per local employee up to a cap of $2,500 per company. Eligible sole proprietorships, partnerships, and limited liability partnerships with at least one local business owner but no local employees will also receive a flat $500 grant. The grant will be dispersed in November 2026. Third, we will provide rental support for storeholders in markets and hawker centres managed by the government and government-appointed operators. Cooked food stalls will each receive $1,200. Market stalls will each receive $600. To help our stallholders over this period, the support will be dispersed across 6 months from September 2026 to February 2027. They will be separately notified of the details such as eligibility criteria. Now, beyond these measures, we are continuing to work closely with the sector agencies to support and strengthen our businesses through this challenging time. We are keeping a very close watch on how our businesses fare, and we stand ready to provide additional targeted support when needed as the situation evolves.